This is the United States Energy Association Power Sector Podcast. I'm your host, Herman K. Trabish. I've covered the power sector since 2006, and I currently report for Utility Dive. My guest is Department of Energy, or DOE, Market Analyst Katheryn Scott, the lead author on the department's comprehensive Pathway to Commercial Liftoff report on industrial decarbonization, probably the most difficult sector of the economy to decarbonize. Katheryn is an MIT-trained senior engineer at DOE, and before joining the department, she was a sought-after private sector consultant to industries from mining to healthcare. In this USEA podcast, we're going to talk with Katheryn about the Liftoff Report's findings on the public and private investment in markets and technologies needed to address the 14% of U.S. greenhouse gas emissions produced by 8 key U.S. industrial sectors and the progress to date toward achieving DOE's goal of reducing those emissions 40% by 2030. Katheryn, the Liftoff paper focuses on what is needed to achieve decarbonization of 8 industrial sectors through commercial markets: chemicals, refining, iron and steel, food and beverage processing, pulp and paper, cement, aluminum, and glass. What are the major reasons that progress on decarbonization in those sectors has been so slow to date?
Yeah, thanks, Herman. Thanks for having me. So kicking it off, the industrial sector is often called hard to decarbonize. I actually gave a talk where I tried to say this is a rumor that we need to stop spreading. There's opportunities today. And really that is, there's this series of assumptions or rumors that have created a perception that this is really hard. So there's some of the ones I call out that we also debunk in the report are things like all of the decarb technologies here are immature and high cost, when there's actually a bunch that are deployable and would be cost net positive to bring on to a system today and make money. I think there's an element of uncertain and unidentified customer demand, and that was certainly true a couple years ago, but we've actually seen a huge uptick of industrials getting demand side support and demand commitments, especially in Europe, and that's coming more and more towards the United States. And then in some, but not all sectors, there's a reluctance for companies to be that first mover. You kind of, especially as you see in the utility sector, I'm sure you want to be the third, fourth, maybe even fifth. You don't want to be first, and there's definitely an element of that here. And so what we've seen to date has been commitments from companies. There's really great goals for 2030, but when you kind of add them up, it's just 1% of that 14 that they would reach by 2030 if they hit all their targets. And that's really informed by using the most kind of limited investment required, limited process changes that you can imagine in terms of energy efficiency, super important, but isn't going to get us all the way there. A couple electrification applications, and then some alternative feedstocks with the asterisks of like, if it's available and reasonably priced next to the facility.
Well, we're in this energy transition where almost everything has a certain uncertainty about it, and that probably creates that myth. But there's also a lot of money, say, especially in the utility sector, there's a lot of money at stake, and that's why people don't want to be first. So that contributes again to the myth. The Liftoff paper reports that significant funding from the Bipartisan Infrastructure Law and the Inflation Reduction Act, or IRA, goes a long way toward providing that financial support needed to solve. It describes 7 major commercial challenges to decarbonizing U.S. industry. So what are the key features of those 7 big challenges, and how much money is going to be needed to invest by DOE and its private sector partners to address those 7 big challenges?
Yeah, so we do the kind of back of the envelope math, and I have lots of caveats. If you go to the report, there's lots of footnotes that this is one scenario, but we estimated you need between 700 billion and $1.1 trillion of CapEx investment. So that's just to build what we need to decarbonize.
That's a lot of money.
It's a lot of money. And so that would come from, the public sector support, but a lot of that is going to be private capital that needs to be catalyzed by the money that came from the Inflation Reduction Act and bipartisan infrastructure law. So I've done some generous accounting, and the DOE has somewhere in the realm of $10 billion for this. There's the biggest chunk of that is going to be $6 billion for the industrial demonstrations program out of our Office of Clean Energy Demonstrations. And so it really brings you back to something you've maybe heard from the DOE before, but that private sector led DOE and government enabled transition. This is really only the start of what we're going to need to see invested in this area. And so the liftoff report tries to get into, why are we seeing these investments, especially ones that are, net positive? And we define that as a 10% rate of return of capital, which we think is where a hurdle rate for some of these industrial companies would lie. I've heard higher, I've heard lower. And what's keeping them on paper?
Well, what is that money going to overcome, Katheryn? What is that? The 7 big challenges. What is that money going to solve those challenges?
Yeah, so we go into in the report 7 big challenges, like you mentioned, and we use what's called the adoption readiness framework. And we use technology readiness. So I'll go through them for you. The first really is around the value proposition of these technologies. We're going to need to spend money to get over challenging economics where there's going to be long payback periods, especially in those high temperature heat processes. They need to overcome operational roadblocks. So there's downtime requirements for making these upgrades. And so the more you can keep your production running, the more incentive you're going to need, or the longer it's down, the more incentive you need to make the change.
Sure.
There's a resource maturity question around the nascent ecosystem of value chain partners. So you need that actually enabling infrastructure. So a lot of pipelines, if you're going to use hydrogen for certain applications, or if you want to capture carbon. Also, the capital formation to really get more and more capital providers, balance sheet, but also maybe infrastructure funds comfortable with these investments. The market acceptance is one of the other challenges we talk about in terms of today that needing customer demand pull to really say, we want this, we're going to pay for it, to get the ambitions of these companies up. And then a license to operate in terms of getting public acceptance for some of these. I mean, we've heard huge community organizing towards hydrogen or carbon capture or other areas. You really want to work with the community to help them understand, why is this going to be better for them? I mean, carbon capture often comes with scrubbers and reduced criteria air pollutants and hazardous air pollutants if you invest in these technologies. And then finally, we really do, I sort of talk out of, there's some truth to many rumors. And one of those is we do have a reliance on a small portfolio of technologies today. And so DOE is investing in some of that earlier stage technologies that are going to expand our options in the kind of 2050 timeline.
Okay, so those are the challenges, and it's going to cost a lot of money, but it's going to cost money over time, which is the numbers sound big, but if you break it up to how much gets spent per year, it often comes out to, perhaps less than we're spending on damages by fossil fuels and things like that. So there's another side to it that people need to pay attention to. And the paper describes 7 solutions to the challenges. And it describes that each of those challenges, those solutions for decarbonizing industry, come with opportunities to the early movers who meet those challenges. So that's why this is about the commercial opportunity, because investors who make the right moves and make them first win in the marketplace. So can you tell us about those solutions and the opportunities they offer?
Absolutely. And we really do focus on, these are the opportunities to put like a company, a community, the United States in their driver's seat on this area. So what are we thinking about in terms of how to overcome that value proposition? This is where DOE has an R&D and applied research organization, and now a demonstration and scale-up arm that is all about closing that cost gap between the incumbent technology and the decarbonized technology. And then you think about really the operational side and the capital planning side for these companies. You want to see decarbonization in your 10, 20-year plan and start putting it against some of your other priorities. Because there's companies where you're competing with basic maintenance for your decarbonization. And so you need to have already had that calculus in your plan. Then we're looking at diversifying, like I mentioned, our technologies through more R&D and pilots. And meanwhile, developing the resources that I mentioned earlier. So continuing to expedite permitting bottlenecks, something I'm sure you've heard about across the energy sector, building that public acceptance, promoting successes where they are happening. And then expanding the regional hub model, things like the hydrogen hubs that DOE is already funding out of our OSED, Office of Clean Energy Demonstration, and then other common carrier infrastructure. And really, as you go through all those things, you're lowering the cost of capital. You're getting into these more mature and lower cost situations that will actually lower the cost for the project overall. And then the other side of this is bolstering that demand side pull. So DOE is one of the partners is part of the partnership in the US government in the First Movers Coalition. So really getting companies to step forward and saying, we're going to buy low carbon products and be a clear demand signal to the market. And then industry coalition. So my office is creating consortia for industry through the national labs to share out. I've heard in cement, people are validating technologies, but 3 people will validate the same technology. And so can you get people to share that result and say, we're all comfortable? And can you use government procurement, especially in things like cement, to really catalyze the market? And so as we do all of this, we'll try and work through those solutions to get to commercial liftoff, as we say, or a self-sustaining industry.
Good. Yeah. And everything you're saying reinforces something that I've observed. That people, even in industry, don't realize that if you move early into something that may not even be proven yet, although, as you point out, there are a lot of things that you can do that are pretty well substantiated. It gets your company moving in a direction that other companies aren't moving in. And so you have a head start, even if maybe you're not, shaking the world with what you're earning initially. And so in that spirit, DOE and the federal government have initiated a lot of funding opportunities and demonstration programs, in tax credits, and a lot of public-private research and development partnerships like you just mentioned. So tell us about what progress you've made in the programs and projects that have starting to get off the ground. Let's say the report came out last year. It's been some time. What's moving ahead? What do you see on the horizon that has some momentum?
Yeah, we've got a few that I'll call out. So DOE's really in on hydrogen. The Infrastructure Act and the Inflation Reduction Act gave $8 billion to DOE. So there's been $7 billion awarded to hubs across the country that will be hydrogen hubs. And then really exciting on that demand side part, we've just picked our partner for sparing $1 billion of hydrogen demand side support to tie into those hubs. So really doing, both the supply and the demand part of that industry. As I mentioned, the OSED Industrial Demonstrations Program, they're continuing their selection process, and that'll be $6 billion across those 8 sectors to start creating lighthouses in different industries. The Office of Industrial Efficiency and Decarbonization has just closed their 2023 funding, and they're doing another funding round, and they're really about applied research, a little bit earlier stage pilots. They've been focusing on heat and separations, and I'll tell the listeners, I think there's more money upcoming, so continue to check back in with that group. And then on the private sector side, in terms of private sector led, like we've been seeing some big announcements. Even today, the hydrogen to green steel group out of Sweden has closed their first of a kind investment, I think around $4 billion for their first plant. really cool financing structure that they've gone after, kind of demonstrating, like you said, what does it mean to be a leader there? What does it mean to think creatively? I think they've been clear they're not using technology that's not off the shelf. They're putting it together in a new way and getting the financing together in a new way. So it's some opportunity for companies. And then one more I'll say is I got a letter from a group of cement buyers to the Secretary of Energy that said, we're ready to buy these products. We want there to be kind of this lower carbon cement on the market, and our customers are demanding it. We're ready to use it. And there's actually legislation on the Hill that has been introduced by Senator Coons and Tillis to allow advanced purchases of cement, to get clearer about low carbon cement definitions and use across the government. So I think we're getting that momentum, but obviously we're trying to grow the tent bigger and really catalyze something for the next till 2030 and beyond.
Yeah, and a lot of this is just getting off the ground, but it's obvious that DOE is starting to create some momentum and some push in this area. DOE market analyst Katheryn Scott, I've got to thank you, lead author on the department's report on commercial potential, needed investment, and market challenges and solutions to decarbonizing U.S. industry. Thank you so much for coming on our podcast and helping us. I want to say that the USEA, United States Energy Association, has a big state of the energy program that is annual and tracks all of this activity. And our podcast is going to keep going at finding the ways that the DOE and other groups are moving forward. So, Katheryn, thank you. As always, I want to thank our listeners for taking the time to check out the USEA Power Sector Podcast. Don't forget to subscribe, like, and share with everybody you know our quest for energy transition solutions.